Good afternoon, everyone. It's Friday, the 3rd of February, 2012. Let's take a look at this market here. We had another big day, another big week. Let's take a look at the numbers, actually. The S&P 500 for the week closed up 2.06%, and we've got another strong month going here so far, up 2.5%. Russell 2000 is close to 5% gain for the month and 4% for the week. So, again, a real big week. The markets looked earlier in the week like maybe they were going to consolidate a little bit as they pulled back down to that towards that 20-day moving average, but the buyers quickly regained control with that gap on Tuesday, or I guess that was Wednesday. Excuse me, and it's been off to the races again since then. So we gapped beyond the resistance, the short-term resistance that we had in this market, and actually that short-term level, if you remember, was a bigger level as well because that was basically the gap area from just before the U.S. debt was downgraded by S&P 500 or S&P by the what's the name of the company? McGraw-Hill S&P. Anyways, the point is the market is exceeding all these levels that we look at as potential resistance, which is again why we always call them potential resistance. And of course, when the market begins to slow down after getting extended as it has, it makes sense to become a little bit cautious as we broke below that support level and regained it though the same day and broke that trend line. But again, this goes to show that breaking a trend line doesn't mean that the market is reversing course. It means that the rate of ascent in this case, because we're in an uptrend, has slowed down, and generally it means the market's going to correct a little bit through time. But the buyers seem to be impatient, and shorts are just getting buried in this market. So you look at this weekly chart, and the S&P 500 now, the next obstacle is basically 135 and a half up towards about 137, last year's high. And if you recall, again, this inverted head and shoulders pattern that we had been observing for the last several months really has been very a good pattern as we've been, this market's been holding above the rising 10-day moving average and then closed right, about at it on Tuesday or Monday, I guess that was, after breaking below briefly. But it held above the 10. It's holding above the 20-day moving average and continuing with its pattern of higher highs and higher lows. And the corrections that we've seen have just been short-term corrections through time. So the what seemed like a crazy target at the time, if we take 116 up to 127 and then add those 11 points to the breakout area of 126, our upside objective is about 137. And again, that 137, if we take a look, actually, let's take a look. I forgot what the number was for last year for the high. 136.57, actually 137.18. So 137-ish is our target. That's the highs from last year as well. And it seems like this market is just being magnetized up to that level. So again, the market is innocent till proven guilty. We want to look at the messages across different time frames, and it suggested that we become a little bit careful in here as it broke that support. But the pattern of higher highs and higher lows is back on as the larger trend on the daily and now the weekly time frames, where we broke that downtrend line in this big prior level. That bigger trend is really what's showing where the real power of this market is. I had mentioned the other day in a blog post that while the Nasdaq 100 was making these highs and just been a beautiful uptrend with the higher highs and higher lows above that rising 10-day moving average. And if we look at the 65-minute chart, you can see here we've got a 5, that's the red, and 10-day moving average being the blue. We never broke the uptrend line in there, and it sure seems like we just keep getting more and more extended. But again, that's not a reason to sell short. Anyone who's thought the market was up too much and decided to use that as a justification to sell short this year has been run over. And it's innocent till proven guilty, and we're still in that uptrend. But the point I was trying to make was, while the Nasdaq 100 is definitely, as we know, had broken out to 10-year highs, and looks like it's on its way towards 64 to 65 possibly. The Nasdaq Composite had not yet broken out. Well, if we take a look here at the daily chart, you can see we have today broken out, in fact, on the Nasdaq Composite as well, which I believe is 2,000 stocks versus the Nasdaq 100's obviously just 100 stocks. The 100 largest non-financial stocks is what the Qs basically represent, and that's the NDX if you're just looking at the index. But you can see here clearly that we did break out on the Nasdaq as well. So further confirmation of the strength of this market on a broader based index than what we typically are looking at here with the Nasdaq 100. The Russell 2000 also had a great week. In fact, as we had pointed out, the Russell 2000 was up 4% this week and close to 5% month to date so far. But this one, the big level in here had been that 77 level, and once we overtook that, this is where we're really kicking this bullish drive into overdrive. We got the afterburners on right now. These are some of the levels I was pointed out yesterday, I guess, for subscribers. It's saying as long as we hold these short-term, these are the important levels that if we pull back, we want to see hold. And we're talking in particular about 80 and a half, near where that 5-day moving average would have been met. But of course, the big gap higher showed us that, again, it's innocent till proven guilty. If you're going to sell short at the end of the day thinking it's up too much, it's a very dangerous strategy. It's much easier to go with the trend. And the semiconductors continue their march higher. Every level that we've been looking at in here as potential resistance and in little areas where we've encountered a little bit of supply turns out to be just a little pause on the way higher. And the next level where we would expect maybe to find such a pause for the semiconductors would be up near about 35 and a half. The market is extended though, so don't obviously take too much risk. And here's what we were talking about yesterday. We wanted to see it hold above 34. This was a prior level of intraday resistance, which became support in this 34 level. And you just have to respect the trend and look at it and say these are potential levels of resistance. When we get to those levels and we start to slow down like we did in the semiconductors here this week, you want to take your foot off the gas a little bit. And then in Tuesday or Wednesday's blog post, I said, it looks like the foot is back to the floor, that the buyers have regained control. You have to be able to move with the market rather than put your opinion out there. Some people incorrectly thought I was bearish after Monday's video. I was short-term cautious to slightly bearish is what I said. Then on Tuesday it was becoming more neutral, and then Wednesday the buyers took back control. It's just being in tune with the market and listening to what the market has to say. And the financials, I've had a lot of people emailing me and telling me these that they're junk and that sort of thing. And first they said we weren't going to make it beyond the 200-day moving average, and they said there's no way we were going to hit that 1420 level, and then the 1450 will never be hit. If it does, I'm going to short the world. And I don't want to wish ill upon anyone, but I hope you didn't short it, or if you did, maybe it'll teach you to keep your mouth shut, because nobody knows what the market will do, but you have to listen to what it's saying and try to be in tune with that rather than say, hey, I'm smarter than the market is. We're in an uptrend. The financials closed right at a high. So, just continue to respect the trend and listen to the message of the market. And it won't be this good of an environment all year, obviously. That I can tell you with certainty. There's going to be pullbacks, but enjoy the environment we have for now and have a good weekend. Thanks for tuning in.